Are we ready? Check. I think we're ready. What's up, boys and girls? Man, what a weekend. I don't know about you guys, but it was looking like, all right, maybe, just maybe, we hit a little bit of a bottom on Friday. And then what happened on Monday? You know, market, dude. Another case of the Mondays. But it happens. All I can tell you is that right now, it's Thanksgiving coming. Did anybody put out Christmas lights yet, by the way? Look at these guys. It's not the image I imagined. Dude, actually that's that was the same thumbnail as last year. We put the turkey suit on, It's not the Halloween costume. Rich Jasonistas, yes, I love it. So far, it's a little upski, a little downski. All I can tell you is that it's choppy as hell right now. And actually, so if you don't know what they're laughing at, if you're on Twitter or something like that, this is the thumbnail today. Is the market cooked? I used the same thumbnail last Thanksgiving because every year around this time, for whatever reason, we get a little wonky. And I mean, it's not like a technical term wonky, but the market gets a little funky. And it's just choppy, right? There's the seasonality to the market sometimes, the high holy days, sell Rosh Hashanah, buy Yom Kippur stuff. And then there's this time somewhere around, late November, that we get a little dipski that usually turns into a bit of a ripski. But I will say this year seasonality has been a bit off, and I'm not sure where we go from here because usually we have a rough September, and we did not have a rough September. We actually had a freaking great damn September this year, actually. And so we'll have to see. There's always that one crazy December that stands out in my mind of like the one where Santa did not come to town and it was just like the Grinch Christmas Eve. And I don't know that. I mean, that's a different situation, but hey, we have a lot of stuff happening this week. We have the government's open, so that finally happened. We have the biggest earnings of the season, of course, if you didn't know. Hood is a buy. Dude, I was ready for the dip on Friday. I was prepared, ready to roll. And I posted something on my X feed. And then it was like 113 something in the pre-market. First of all, I've never seen, so I've seen some stocks similar to Hoodie, but the dip was bought so fast on Friday morning for Hood. I was like, all right. And I have on my charts, I have certain levels. This is right now is actually one of those levels, 117. It was below 120, right? 117 to 113. And this is a level. I don't want to see it get tested this many times, but dude, the speed that dip was bought on Friday, what's up, everybody, was just so insane. And I will preface this that Friday in a bear market, it's not a bear market, but Fridays in a bear market are usually green. But the way that usually works is that, the sell-off does tend to continue in the morning, and then the short covering, if you will, happens towards the close, not usually in the open. And that was what was weird about that. About the whole market. So to see the buying just ram right into the open was, it was actually pretty wild. And the close was a little weak on Friday, but still it was pretty like well above where we pretty green. So I was happy. And then today I'm like, we're still at 125. I'm like, you need to hold this. And then just like out of the gate, I'm like, what a sell off. And here we are, kind of towards those. Not, it's technically a higher low, but it's very much on edge. I don't know if I'm gonna see $100 on Hood. I have no idea. But I mean, just the appetite for Robinhood as an equity was astonishing on Friday, honestly. But that said, it's down pretty good. I mean, it's down like 30 something dollars from the highs. Nearly 30, I'm not quite 30%. It's down a good amount from the highs. So can it come down lower? Totally. It really, really can. So I don't know. I think it's still a watch. I actually had 120 puts for the end of the month on Robinhood, which I quickly turned into credit spreads, and now I have to peel that back and continue on. So I might throw just like a ratio, keep it as a ratio. Anyways, I don't want to get too complicated in the weeds. and then I bought Tesla on Friday, which ends up doing really well today. But I'm not sure that's going to hold either, because we'll see. I think the market's in flux is what I'm saying. Some things bounce, some things look short, some things look long. And I think we're in a bit of a rotation and a bit of a holding pattern, really, because Wednesday we have NVIDIA on Wednesday. Did you guys forget about that? NVIDIA on Wednesday. Palantir, where's Palantir? Palantir backed their stock 165. I mean, I saw Palantir, PLTR, 173. So 173 on Palantir. If you guys watch the other show, Amit show on Technical Tuesdays, 173 was my level also that I was watching, where I had kind of called out, which, by the way, breached on Friday and closed above. So I think what's important now, bmnr sub 33, is maybe not to jump in right away, because a lot of things are at very, very key levels. I heard somebody comment, very key levels, but maybe just to kind of like wait and see, because I also posted something on Twitter. It was like, my job, our jobs as traders, if you're traders, this is not an investor thing, but as a trader, your job is to identify the trend. We don't have to top tick bottoms or top tick tops and snipe the lows. That's not the job. The job is to identify a trend, get in, ride the wave, and get off without wiping out. That's the job of a trader. So I don't have to snipe a low. I just have to catch a wave while it's in motion. But speaking of someone who likes to catch waves in motion, we got a buddy. What's up, Evan?
Yo, I'm outside. It sounds horrible.
No, it sounds great. I
Okay,
mean, we
let me
love you
know.
anytime that you show up.
There is a lot of wind, and I can go inside, so just let me know.
I think you're perfect.
All right, how we doing? How we doing?
We're
I'm
doing
excited for the
good.
week.
I mean,
Should be done with those
cautious.
dreams.
Are you more cautious or are you more optimistic right now?
My time frames are a little longer than I think a
Yeah.
lot of people in here, so I live life there, bullish. But I'm just kind of like, when do I buy? Is really
Yeah.
what I'm sitting here thinking in my long-term portfolio, but I know my time frames are very different than a lot of the
Yeah.
awesome chat you have here.
I think if you have a longer time frame, I think that's exactly right where you should be. When do I buy? And we had a dip not too long ago. It was an okay dip. It wasn't like the greatest dip. So and we're still building out these school of gains classes. And it was funny because I was doing another one over the weekend and I'm scrolling through these charts and I was trying to pull some historical examples of some things. And the more I was looking through historical examples of like teachable moments, and I'm looking at these charts, I'm like, oh shit. Not gonna lie. I'm looking at a lot of stuff and I'm like, from a long-term perspective, we might be pretty stretched. But we shall see. We shall see. So let's get on with it. So if you're new to the channel, number one, give the video a like. Number two, make sure you're subscribed, and you'll get to see my pretty face. I mean, we'll see, and you'll get to talk to Evan every now and then, and whoever else we bring on. But what we do here on Mondays is we kind of go through the week, what hit the headlines last over the weekend, prepare for what's coming forward, specifically from a week-to-week perspective, maybe some major headlines that might affect our investments, definitely our trades moving forward, and what's important for our portfolios as we move forward throughout the week. I'm kind of tweaking with my recaps here and like trying to find a better format or like a clean format. But for me, just major macro headlines: U.S. trade deal seals. That seal shutdown ended, and really looks like top on the headlines. Tech is still doing decent, and emerging markets looking like they're popping this morning. Mostly Alphabet. We'll talk about that in a little bit. Bloomberg confirming phase 2 framework for easing tariffs on EVs and chips. And then Reuters notes Q1 taper for December 1st, boosting liquidity. And that a lot of these things are affecting things like gold, Bitcoin to the downside. And then we have other things like retail earnings on deck as we finish off tech earnings, capping with NVIDIA on, I think it's Wednesday as well. Major stuff, specific headlines. I think really it's just like the hawkish data backlog concerns as the government reopens. So we could be seeing a lot of, as the data comes in, there's a lot of hawkish data that might be flooding the markets. And that, I think, is probably the biggest concern that might be hitting the tape here and what we're seeing at the moment in real time. We are coming in, and the biggest thing about the sell-off right now is that we're coming in to a market that a few days ago, maybe a week ago, had like a 90-something% probability priced in of a December rate cut. The second that Jay Powell said that is not a foregone conclusion, that was the moment that the market proceeded to start selling off to the tune of about like $1 trillion something net, right? And today we sit at about a 40 or 50 something percent probability, down about 43%. We've seen outflows in general, like across a lot of ETFs, specifically crypto. That is getting pretty much demolished right now. Bitcoin wiping out all of its gains for the year, and Ethereum. And the biggest headline from a tech perspective is Berkshire buying Google. And that's about, how many shares was it? Did you see?
I know it was like $4 or $5 billion worth. I'd have to look at how
I have
many
a
shares.
$4.3 billion Q3 stake that he built up in Google, that's the new position. So I don't know what percentage that is. And were there any? So I know, Evan, you covered the 13F season.
It is 1.62% of his portfolio, of the stock portfolio. It is 17.84 million shares.
Okay, so
4 million shares.
1 something percent is not significant. Well, I mean, it's bigger than a lot of them. It's not like Lulu insignificant. When he bought Lulu, that was incredibly insignificant.
It is the 10th largest holding in the equity portfolio
There
out
you
of
go.
like
So
30 or 41 stocks. So it's not
insignificant.
yeah.
I remember when he bought Lulu and that stock just absolutely exploded, which ended up being like a nothing burger because the very next quarter he had sold it. And then what was the UNH purchase? Do you remember what percent that was offhand? If not, no big deal.
I could tell you in a second. Right now, UNH is 0.65% of the portfolio. So they own about 2 to 3x more Google than they do UNH.
All right. So there you go. So that is significant. Was there anything else that stood out for you? Because I know you cover this in depth on this 13F season is like your thing. You've been covering this for a long time.
It sucks that they did it on a Friday. So a lot less people kind of cared about it. And honestly, it was a little bit boring. A lot of people reducing stakes in certain things. It just wasn't that crazy many new buys. I'm curious if people saw it, had anything that they were watching. But for me, no, there wasn't really that many that stood out.
This is probably the biggest standout, I think, across the board.
100%. Google definitely was the big winner from this. It was 3% up in after hours. And then it obviously was up 5-6 earlier today. I don't know what it's doing now. But Google was definitely the winner.
Google is the winner. Let me see. What is it doing now?
They did sell some Apple. It's funny. I think Ackman sold Google and then Buffett bought it. It was like a little handoff there.
Nice. Is there any other headlines that are standing out for you? Since I know that you cover this stuff, like pretty. Let
Yeah.
me just. Yeah, if you want to
The
hit them, I just took a broad swath since you were going to be here. I figured that you would have this like out of pocket, anyways,
from
or
last week or
off the
this week,
cuff.
I thought so. People are really gravitating towards this Jeff Bezos going to an AI startup or starting his own AI company. So that was one story that people sort of seem to gravitate towards. This was the first time he's taking like a active job at a company since leaving Amazon. So
Yeah, so you kind of
funny.
broke up, but Bezos is starting. He's taking another active role in a new company, first time since he left Amazon. It's an AI startup. It's a startup. It's an AI company, but first time he's taking like an active role as leadership. It's what's the company name? I'm trying to look it up.
Project Prometheus is what it was called. That might not end up be the name, but Project
Okay.
Prometheus, $6.2 billion of funding. I don't know how much of that is Bezos or not, but they're a very well funded startup.
And he's going to be the CEO,
Co-CEO,
co-CEO.
co-CEO. Yeah, but there was a lot of Amazon news today. Amazon is also doing its first debt offering in like 3 years. Apparently, they're raising 12 billion. Thought that was a little bit interesting.
I saw that. I saw Amazon actually losing a key level, so we'll see. I don't like to see Amazon losing that key level. I liked Amazon where it was. We'll see if it can hold any of these earnings gains. Markets, honestly, it's a bit shifty right now.
Novo Nordisk lowering some prices on the direct to consumer weight loss pills a little bit there, down to 349 from 499 for certain things. So I didn't look too deep into the price action, but I know Novo, Eli Lilly maybe move on that. And then the last one I'll give you was an Apple headline from over the weekend. Actually, there was two Apple headlines. One that Tim Cook is reportedly stepping down next year, as early as
What?
next year. Yeah, it was that like that Apple's gearing up for succession talks and that he could retire as early as next year was the headline going around. But also, Apple is reportedly making changes to its iPhone release lineup next year. They're going to be doing, apparently, instead of releasing four iPhones at once, the two regular models and the two Pro models, they're going to do just three models, a Pro Max, and then a foldable phone. And then 6 months later, do a standard and an SE version or something like that. So
I
changing
mean,
the way they're releasing the iPhones going
what have
forward.
we've been waiting for this foldable phone for? I mean, feels like a decade now.
It sounds like 2026 is the year. Next year, Apple's coming up with a foldable phone.
Dude. And these Google commercials are getting like more and more aggressive, like anti-Apple commercials essentially. They make me laugh, dude, every time I watch them now. But I still have yet to buy a Google phone. So I don't know how well they're actually working. But we'll see. The stock is doing friggin' a lot better. I just don't know that I want to chase it anymore here. It's doing better. Novo's getting a bit of a bid today. Look at that. That's up a couple bucks. Looking decent. We'll see, man. We shall see. So I think net, it's all about the rate cuts right now. And it's all about, so this week it's very much about Nvidia. And then we have huge things on deck for the economic calendar. So if you don't watch these things, you need to. Today is basically market noise. Essentially, this entire next 3 days is going to be meaningless in terms of the market trend. I'm just going to put that out there right now. So if you're a long-term investor, don't even look at your portfolio for the next 3 days. It matters not. You might not even want to look at this week. I'm just telling you the truth, because everything after this week is what's actually going to matter, because between now and Friday, things are going to get shifty. I don't know that it's actually going to be a dip buy, but what's true is that after this week, that's when the real kind of trend is going to emerge. And that's when you'll know, are we good? Are we in the clear, or are we not? So just rest easy knowing that everything between, like, for this entire week is just noise. And because of that, I might even say that this entire week could potentially be completely flat. I don't know what Miss Cleo is going to say. I haven't even looked at her thing. We will look at it in a little bit. And in terms of seasonality, this is the small cap January effect. Oops. And I am still looking. If we're going to see any kind of signs of life, we're looking for this kind of late December bottoming or late November bottoming that really kicks off something called the January effect. It doesn't mean that that's going to completely carry on throughout the year. It's a bit of a dip. We're already getting that dip, but the low of the lows, I mean, typically happens in this November kind of area for the Russell 2000 and the Russell 1000. This is Russell 1000, by the way. That's kind of like small cap growth, medium cap, mid cap growth. So that's kind of what you're looking for. And actually, that we're seeing a lot of this right now. I mean, it's not this low. It's still pretty high. So that's the only thing that has me a bit on edge, because we're actually doing really good. But that said, just a quick look on the high level calendar today. Look, government's open. So we have a flood of data coming in. Again, that's why I think we see a little bit of trepidation. Also, the market is a bit stretched. Not going to lie. That is what it is. We have a handful of treasury auctions. The Fed is on the tear right now. We have a ton of speeches this week. I couldn't even count them, but 5 today. Tomorrow, we get ADP, and then boom, this data starts coming in. We have not had import-export prices in God knows how long. I don't even know. So Wednesday, we get the old FOMC minutes. We have been having some of those. And then Thursday, this is the day. Thursday, we get the all-important NFP numbers. And it has been 2 months, I believe, since we've had official NFP numbers. I don't even know which NFP this is going to be, quite frankly. But this is the day that the data is going to start really come flooding in. Tuesday, we get this. This is some data that we haven't had in a long time. Market's probably going to knee jerk on this, and we'll see what happens. But like I said, if you're long-term, this entire week is probably going to be noise for you. I'm just letting you know. So if you see some crazy shenanigans, it might be interesting to dip your toes in, but we won't know until next week after the dust settles, because the dust is not going to settle this week. Knee-jerk reactions may happen this week. Dust will start settling after this week. And then Friday, we get consumer expectations. But let's go ahead and take a look, because Evan puts a lot of time and effort over the weekend. He doesn't have a life anymore, and he's gone full blown financial Twitter or X now, and he spends his life on X for you guys. And if you don't follow Evan, you should. I'm gonna put his link in here. I think he's got an obscene amount of followers. What are you at now, sir, on X?
664.
664, that ends in 1,000. 664,000 followers. You have a YouTube also, right?
Grow more than Wolf YouTube, but yeah, dude, the Wolf YouTube and Wolf Trading YouTube, which sometime in the future people will come back on. We're killing it.
Yes.
No, I have less of a life than I have ever had in the past. So let's
Yeah.
all,
So gonna grow
content
a
might be
couple
better,
different
though.
channels. There's gonna be Wolf Trading, YouTube coming. There's Wolf Finance coming. But yeah, there's a whole network effect happening here. But anyways, let's get on with the thread. So Evan goes with the staple NVIDIA thumbnail this week because, yeah, this is the one. So I believe this is Wednesday, NVIDIA earnings. So merry NVIDIA earnings week to all who celebrate. Can Jensen save the market? And that's the big question, quite frankly. That is the question. So after the close on Wednesday, this is the one. Again, between basically, that's what I'm saying. This entire week is going to be more or less shenanigans. So take it for what it is, and that is exactly what it is. So after today, we got Jinko Solar, the old king of solar. Actually, I think that was up today. ARMK, was this one of those? I don't know. I have to see this. Nothing really today. Tomorrow, before the open, Home Depot. So we have Home Depot and Target for the retailers. I think Lowe's should be reporting also at the same time. It's probably not in here. I don't know. Home Depot and Lowe's are pretty much near the lows. There's not, no pun intended.
But And then you said
Yeah.
Lowe's was Wednesday.
Lowe's is very much near the lows. I don't know. So there's the stat in my annual trade, which has not really worked out the greatest for me the last couple of years, was there is like a 90 something percent probability that if you buy or Home Depot late Q4 or sometime in Q4, that by late Q1, early Q2, you will be green. It's like 90 something, like extremely high probability that if you buy Home Depot Q4, that by late Q1, early Q2, you will be green, because that's their prime season. Home builder stuff this year, a lot of interest rate stuff this year. And I think the turning point was funky last year. So it's TBD. We got a bit of a bounce. But I would guess that about now, or maybe even after earnings, that's when it starts to show up, if it's going to show up. But I need price action to tell me. It feels very close to the lows, but I think that this year I might go something along the lines of a long Home Depot, short Lowe's trade, just to be careful. And then Target also. So all of these I think are down a bit, just in probably cautionary sentiment. And then after this, then I think we ramp into the holiday season, because remember, Black Friday is coming. And that is their season. And Home Depot and Lowe's both have the, Halloween sales, Christmas sales, and all those kind of things. Although I will say, I live in a very festive neighborhood, and I live in one of those neighborhoods where I could not leave my house for Halloween because it was so freaking busy. The traffic was insane. Like one of those places where they drop the kids off at your street, and then that's how they do it now, I guess. Like they drop it off and then drop the kids off, and then they basically, whatever, everybody goes down the street. So I have to decorate, and I get to decorate, and yeah, the selection at Home Depot this year, guys, I'm just saying it was, I'm pretty disappointed. That's all I know. Usually it feels a lot better, but not so good this year at Home Depot. So I don't know how I'm feeling about this one. But anyways, yeah, and then it comes down to NVIDIA, and this is the one after the close. A lot of expectations. Palo Alto Network also after the close. Look, Palo Alto Networks, there are certain stocks also, like Palo Alto Networks, CrowdStrike, things like that. These stocks tend to be buys after earnings, not necessarily on earnings. So we'll have to watch how these goes. Walmart, probably the best retail stock out there right now. We shall see. Webull has just been like a massive disappointment for anybody long Webull, I believe. But yeah, there's just one name on here that really, really matters. And that is NVIDIA, man. And this is going to move the market. What percent of the market in general is NVIDIA now? Like, of the total market, this thing has got to be massive.
Total market, I don't know. I think the Q's number, you're talking like 10, 12%, or 8 to 12.
Oh my
SPY's
God.
like 6 to 10. VTI, Vanguard Total in stock ETF, NVIDIA is 6.7%.
6.7 of the total market, 6.7%.
Of VTI, yeah. Of everything that's in VTI, yeah.
Yeah, that's Vanguard Total Market. Yeah. All right. So it is in fact NVIDIA week. So that's what we have. That's what we have on deck. So sometimes you get a little bit of a pullback ahead of earnings, and then kind of TBD. I feel like the best case scenario is that NVIDIA is completely flat. Quite frankly, that would be ideal for me. But yes, make your own decisions. That is, or make your own decorations. I was gonna say make your own decisions, but I'm having to make my own decorations. But the custom, like make your own fit, custom cut lights or whatever. But I'm telling you what, this is like a three week planning session. I don't know. It's crazy. All right. So okay. So all right. So Monday, IREN has something. IREN and Bloom based on what? Oh, options volume. All right. Code KBI. Was there anything on the Catalyst watch here? So Seeking Alpha does a good Catalyst watch. Evan pulls this up. We got some IPOs on the week. He doesn't
Yeah,
say
there's like
anything
a
here.
couple. There's a couple investor days. Square has one on Wednesday.
Baidu
That I'm looking
reporting. We already
at.
had JD was like a sell the news. We'll see. So I saw a little recovery this week or today. We'll see if that holds. Not doing much right
Saudi Crown Prince Mohammed bin Salman going to the White House tomorrow. Maybe oil and gas moves a little bit off of that. I don't know, but that is on that the calendar.
Oh, Microsoft flagship annual conference for IT. What is this one called? Oh, Ignite. Microsoft Ignite. So okay, so Microsoft Ignite is it's like AWS re:Invent. And yeah, Ignite is a big actual Ignite is a big conference. This is their big conference. Even if they don't highlight it, but Ignite is the big conference for Microsoft. That's tomorrow. So latest advancements in cloud, AI, digital workplace. Yeah, Satya will make his presentation. So this is like it's like Apple's WWDC. It's like Amazon's re:Invent. It's like this is Microsoft's I don't know what Meta's is or what Google's what's Google's called?
Meta's is Connect, I believe.
Yeah, Microsoft's is Ignite.
And then Nvidia's might be GTC.
Nvidia's is GTC. Microsoft's is Ignite. This is Microsoft's. So heads up, Microsoft's annual is tomorrow. Look at that. Sometimes a sell the news event. Who knows? But it's that. Saudi Crown Prince Mohammed bin Salman is due to meet with President Trump at the White House. This is what you're talking about. Oh.
I don't, 90% chance there's not that much interesting there besides just random headlines, but I'm sure there's AI, maybe some other ones.
Oil.
It is Saudi Arabia.
Yeah, that's oil. I mean, I would almost say 90% chance there is something happening here with oil stocks. Yikes. Okay. So trade deals, something. Or chip deals, I don't know. Something here. FDA action. So this is why this stuff is important. So we got Microsoft Ignite tomorrow. Trump to meet with Saudis tomorrow. Yeah, that's a lot. Bill Ackman hosting a social media live stream. Why does it say next week? Oh, okay. So that's later. Palo Alto, NVIDIA. That's after that, after hours. Block has an investor day. Square. NVIDIA Slush Conference. I've never heard of that. All right. Deutsche Bank, Federal Reserve. Okay, so FOMC minutes. Earnings conference call. AMD and TSM. Oh, this is just a note. All right. Thursday. Oh, nothing really here. Shareholders would guess will vote on a buyout deal. Guess as a buyout? Interesting. Did not know. And then Walmart in the morning. Cal-Maine Foods. Yeah. And then Friday, PMI reports. And that is it.
The macro calendar and trading economics, which is next, still looks a little weird from what the
Yeah.
government shutdown and everything, and still a lot of stuff we don't expect. So I don't know.
So
Not the best
import
calendar
export
right now.
prices, we have not had this since the shutdown. This is the first time we're going to get these in a long time. And that's tomorrow. So how the market reacts on this is about inflation kind of stuff. So it might be important. I don't know how the market's going to react to this. If they even look at this, it's a TBD. But it's right now. It's very much the speeches. So all the speeches, 1, 2, 3, 4, 5 speeches today. One speech tomorrow. ADP is a weekly change. ADP is now producing weekly numbers, so it's a bit frequent. I don't know how that's going to go over. Wednesday FOMC minutes is nice to have, but right in front of NFP on Thursday is not going to be that big of a deal. But again, why this entire week is just shaping up to be a complete chop fest, and I mean, slush bucket of a week. I don't know. I mean, honestly. And then building permits, housing stats. I don't think we've had that in a while. So that's coming. And then Thursday, existing home sales. And we have 1, 2, 3 speeches. Thursday. No, yours is wrong. So on Thursday, we have non-farm payrolls. So I think yours is just not updated. You don't have it. So Thursday, November 20th, in the pre-market, we now have non-farm payrolls coming. So this is the first time we're gonna get actual non-farm payrolls scheduled. It's not a Friday that we're getting it. It is a Thursday. We're getting unemployment rate. This is the flood of data that's going to be coming in that we have not had in like forever. So yeah, I think I don't know when this was updated, but this update here, this is big. And the market has not seen this data in literally forever. So I think this is going to be the first time that the market's going to see this. And that's why I'm saying it's all about, this is going to be just an insane chop fest. That's all I can say. Wednesday, Thursday. It's Wednesday night. We get NVIDIA earnings. And then Thursday morning, we get slapped, boom, like with the biggest macro data point that we've had in multiple months, back to back. So we just got to let this dust settle here because things look weird. And so I would really just give it the week to see how things pan out before making any major decisions, quite frankly. If you see something completely out of control, then, it might get overdone. But it'd have to be a big overdone to the downside. And I would probably get excited, but if it's overdone to the upside, I probably wouldn't. I'm not personally interested in chasing because it's probably going to be also a knee-jerk reaction. And we do get all of this payroll data, hourly earnings, all this kind of unemployment rate. We have not had any of this for a very long time. How many speeches do we have here? We have government payrolls. Good God, who knows? All of this. Geez, 1 speech, 2 speech, 3 speech. 3 speeches, and we're getting our claims numbers. We might be getting jobless claims. I don't know. We have not had jobless claims. Yeah. So some claims numbers are on deck, which we haven't had in forever. And then Friday we cap off with more speeches. 1, 2, 3, 4. 4 more Fed speeches. I mean, this is just insane. And then we get composite PMI, like S&P Global PMI, which is okay. Here we go. So we're back in the mix, but we haven't had this data in a long time. It might be good. It might be bad. We don't know. But I think the market is kind of just on edge because it doesn't know. And the one thing that the market doesn't like is uncertainty. And so between the Fed, and here's what we were at 93. This is the Fed Watch tool. This is December rate cut probability. We were at 93.67% on October 7th, 1 month ago. 93%, 94% almost probability of getting a Fed cut in December. And today we sit at a 42% probability. And so this right here is the reason for the pullback. Plain and simple. That is literally it. So, I mean, the lower that this goes, and then if we do actually get a cut, which who knows, currently the probability sits at, I mean, literally 60%, 60.1% is the accurate probability. And then for January, we do have one more. We have one priced in here, and then we don't have any additional rate cuts priced in until 6/17/2026. So again, we still sit with it's all about the commentary for really like the next 6+ months of FOMC. And then how long do we have Powell for before he's out?
2 or 3 meetings after that. May, April.
April.
June, but the June is going to be with a different chairman. So April, he has 1, 2, 3, 4 meetings left, I believe.
Yeah. So basically, the market's saying, all right, well, he's going to give us one more cut, and then he's done. So it might just be all about who the next. It might just be all about who the next Fed chair is, and who they pick as his successor. That determines the market direction. That would be weird, but that could be a thing.
That's really it on the thread. I'm gonna have to drop off in a second, by the way.
Yeah.
If you guys are watching this stream and not subscribed to Paper's channel, you are missing out. You also should hit that bell button so you get notified when it goes live. Subscribe.
How much ETH did Tommy buy?
Not that much, honestly, like 50,000, 60,000.
Really?
3.501 million to like 3.55, 3.56 million.
Dude, easy
Sailor
waiting
bought
for
a
the
lot.
dip.
Sailor bought a good bit.
All right. Well, we'll see. We're about to find out who's a better trader, actually, Sailor or Tom. I kind of have my. I think Tom's going to end up being a better trader than Sailor. Not that Sailor's even trying to be a trader. But all right, man. I appreciate you hopping in.
I appreciate you. Subscribe to Paper. I know where my money is, so we'll say keep it that. It has not been growing yet. It has not been growing yet.
Fair enough. Cool. All right, guys. So what we're gonna do real quick, we're gonna take a quick look at the market, see where we are, and then we'll take a couple. Actually, no, we're not. Before we do that, I lied. We will. Evan's gonna miss this one piece. Before we do that, I will actually check in with our other friend, Miss Cleo, and see what she had to say. Then we're going to take a look at the markets, and then we're going to maybe see about some trades that we might have teed up. But let's go ahead and see what she had to say. It would help if I shared the screen. All right. So here's the forecast. If you're not familiar with this part of the show, this is comedic relief, really, but this is the tarot reading that we get every week for the market. Anyways, the way this works, I got a friend. We call her Miss Cleo. She remains anonymous, but she gives us a tarot card reading for every week of the day in the market. I have no idea how she does it, but sometimes she's wildly accurate. Sometimes she's not, but it's all in the name of fun. And so we get a theme card for the week right here, and then every day of the week we have separate cards. For whatever reason, there looks like there's a lot of gold on the Monday card, and I'm just not feeling like a lot of gold on today's card. This is like 10 of Pentacles, okay? And then and then there's this card, which is whatever, because all I'm seeing right now is this card, which is like the nasty card, and that is Wednesday. And Wednesday is NVIDIA's day, which would be really lame. So this is the nightmare card, where like you wake up, in your pool of blood with a bunch of knives or swords above you. But what I do remember is that this can just be all a dream, and it can be over before you know it. So maybe that's what she's saying. And then more cups and more cups. So I don't really know what to say about this, but she does, and she writes something about it. And this is what she wrote. So, all right. This guy, my growth portfolio is down 40 to 50%. Please make it stop. I don't know. All right. So this card says that we're clutching our coins so tightly that we're unable to make progress. We're stuck and we're stingy. All right, I can get with that. It also tends to bring continuity, and oddly enough, it can inspire some trend weeks. She says weeks. So this could be a big week for the bulls. I mean, we can hope. I would still expect low energy and chop for most of it. That's kind of what I'm seeing. Monday. All right, 10 of Pentacles. This happens near the end of something and not at the beginning. This one occurs once the wealth has been accumulated and we're feeling comfortable. Maybe she's talking about the overnight session. I don't know. Perhaps a bit overconfident. I've started this whole show out feeling overconfident coming into Monday. So maybe that's what a reversal day is possible. I mean, technically that's what happened, if not probable. And there's also a high chance of trend day. I mean, maybe that's what happened. Since Friday was green somehow, Monday could be a time to revisit some of those zones that we blew through on the way up. All right. Fair enough. She writes this Sunday, by the way. In either case, I would not fade anything today. Momentum is the play. Would not fade the trend today. And right now, I think we'll have to see. So Tuesday is the Emperor. This guy doesn't mess around. All right. He carries enough strength to enforce his desires. Luckily for the bull, he favors green candles. So we're likely buying dips and chasing momentum. Trend is not out of the question. All right. Trend is not out of the question. Wednesday is the 9 of Swords. Yeah. This is the nightmare card. We're having nightmares and can't sleep. This can lead to a gap down. Yep. On some significant selling at session opens. On some occasions, when the energy is especially strong, it can lead to gaps higher, squeezing bears even further. Watch the tape to see how many people get short. Watch the tape to see how many people get short on Monday and Tuesday. That will be the primary clue. All right. Either way, don't expect the overnight or morning action to continue into the afternoon. This card resolves its primary energy around and after lunch. Look for a possible fade. Okay, get it. Thursday is the 8 of Cups. Now so it's like exhaustion gap. That's not as bad as I was thinking that she's saying. All right, so we're moving on into a transition phase, finally understanding that our current approach to the market has not been serving us well. All right, so this does not start out very good if you've been bullish this entire time. Like, are you giving up? This could be losses left or simply lessons learned. The last time it followed the 9 of Swords was a green trend day, following a choppy red day. Otherwise, it's a tough read. Maybe bears finally give up, maybe. Or maybe we stop trying to day trade and switch to swing trades. No. Something will change here, and it's your job to find and call it out. Fair. I mean, that's NVIDIA earnings. And NFP day. Oh, I know how that's going to work, though. Yeah, NFP day is going to change everything. All right. That's simple for me. Friday, Knight of Cups. He's a romantic and can be distracted as a result. He's a bit of a wimp and a low energy dude. So chop is the highest chance play. This has been typical for Fridays as opposed to 100% momentum days. Yep. It will be Chop Friday. I can nearly guarantee you that. When it trends is a continuation day of another trend. So if Thursday brings a surge and Friday holds it overnight, we may get a chance to play momentum into the close. The only downside risk is if Thursday closes deep red. No. If Thursday closes deep red, I would almost say go long, Miss Cleo. But anyways, let's see. Recap. The cards are trying to bring us down, but not doing a very good job of it. There's a lot of trend this week, and any negativity should be short. Oh, any negativity should be short term. Famous last words. God, she don't really know either. I don't know, man. This market has been super transitiony. I will say that. So that's what Miss Cleo has to say, and I'm very much in the similar camp. I'm going to do something here that I don't usually do, and I'm going to turn off pretty much everything for a bit here, and I'm going to switch to a daily chart. And this is the index. This is SPY. And the only thing I will say is that clearly we are here, right? And if we continue lower, currently the trend is intact, right? That's a broad trend. It's pretty clear. But we're on the 50-day simple moving average. If we break down, we might bounce, right? And if we bounce and then we create another lower high, so right now we have created a lower high. If we create another lower high somewhere over here, it's not going to be fun. I will just say that, right? And we break down, it might be choppy. And if we continue to break down, well, this is a very long-term chart, then the dip buy is around the 600s, which would end up being very typical. It's a very typical dip that ends up being a rip. This is not a short-term thing, though. Something like this takes a long time to present itself. It's not unlike this, right? Where you're looking at, okay, you've had a lower high, and this entire situation here takes a while to present itself, and it's choppy, right? But you always get that same kind of like level. You get that dip before the rip. So it's a patient, slow kind of dip buy scenario, same kind of thing, right? You get this, you get a lower high. It's choppy. All of this is super choppy. Bounce, 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 bounce. And choppy, dip. It gets rippy, and then a disappointing dip, and then still choppy. So I think all that to say, this is a very long-term view. Very, very long-term view. But whenever we've had a similar setup at the 20 and 50 like this in history, whenever, any point in time, right? Well above, what I'm pointing out is well above the 200-day. Even if it was something like this, we might get saved, right? There's a dip, there's a big dip, and maybe we have a double bottom, and eventually we say, but even here, the distance between the 50 and the 200-day over here, this is, I think, is COVID. So maybe not super relevant, but let's say over here, right? We had a big base to break off of. We just don't have that big of a, we have Liberation Day, but this is more into like 2026, the bear market, if we can still chop. But I think this is my caution, is that these dips might be buyable. Like they could be buyable and we can still continue. But at some point in the foreseeable future, there's going to be a dip at some point in the future, and it's going to be better served off of this area. So even these dips might not be the greatest, because in history, the best dips are in these areas, right? When you look back under the 200-day, which is not what they teach you in school, right? Like under the 200-day is just not. We're not from an investing perspective. We're not there. The trend is faltering. That trend. Oops. Sorry, there's a lot of stuff here. But that trend is going to get choppy. And unless we end up making new highs from here, the bounces are going to be suspect. And I think the best case scenario that we could go into at the index level is sideways, because what really needs to happen is that this 50-day simple needs to at least even out. That 20-day simple needs to at least even out to let the 200-day simple moving average catch up. In the most simplest terms, the distance between the 20 and the 50-day simple moving averages are just really far away, which means it's becoming a bit higher risk to deploy net new capital until they're closer together and we have cleaner setups from a longer term perspective. So that's my one caution. We're kind of at risk from a broader term perspective. TBD. We have NVIDIA, but we are on the edge. So zooming in a bit, I'm going to take this down here. We have some ADP levels. I think you guys can kind of see, like, all right, so this was a higher high, but this is now going to be a lower high. Lower high. But we're still in higher low territory. So best case scenario, and we're losing kind of like that broader trend. I'm going to take some of these fibs off because we can't think that we're necessarily going into extension mode just yet. At least not until we're well over some key levels. And key levels being these 80. So the last data points that we're running off of are these ADP levels right here. And we're kind of chopping in between. So if we were going to be trending, and let me change these so you can see this a bit. This should be better. If we were actually trending over, say, like 685 for this week, or let's say for next week, if we're trending over 685 for next week, then I would say for sure, right? There's no question in my mind that we're actually going to see 700 plus at the index level. Right now, what's happening is that we're kind of like hovering around the 50-day simple moving average. And what we're really doing is we're playing what's called like simple moving average ping pong in between the 20 and the 50-day SMAs. And in this exact moment in time, what just happened as we're doing our stream is that we kind of like bounced off of the last ADP low, which was on November 5th. We're going to get new data on Thursday. So again, this is kind of all for naught. I think what you can expect is that if we're trending below 669, then in fact, where we should be going is we will likely lose this 50-day SMA if we go below, and we will probably hit that 662 on SPY tomorrow, or if some kind of headline shows up. If we end up like trading in strength, we'll probably revisit these lows. Do we actually breach that? I don't know. We'll have to see what happens when we get there. But in truth, that's where we are, right? And to see further than that, what I can tell you is that if we do lose that level, then it's 650s and then into this box. But again, before I start like prognosticating or speculating into that, we have to preface everything with this entire week is kind of like, it's kind of nonsense anyways, because this is all going to be very short term in price, because we're going to get hit on Wednesday with, NVIDIA earnings, which will change everything. And then Thursday morning, right after that, we're going to immediately get hit also with a new set of non-farm payroll data, which we're going to reset with the market, right? And the way this is going to work is very simply, and I'm just going to go backwards in time. This is what a non-farm payroll day looks like, just like this right here. And so if you're not familiar with it, that day could be very violent. But what we're going to be looking for after that specific day is the market going to be trending moving forward? Because Thursday is very likely going to mark the high or the low for the rest of the month moving forward. And that day, Thursday, regardless of NVIDIA earnings, is going to mark the high or the low for the rest of the month. And that's just what's like nearly unequivocally true, just like it has in the past, just like it will moving forward. And this is another example of that. This is not even non-farm payrolls. This is ADP, right? And still this level right here, in the absence of non-farm payrolls, this is what that looks like, where the market kind of uses this as its fundamental level that creates a fundamental pivot that creates a technical level in the market. And that's exactly what we're doing. So right now we're literally chopping inside of 672 to 669. And until we see tomorrow, it's only tomorrow that if we open below 668, then sure, we can kind of whipsaw just like we did on Friday down nearly to the 661 level, which that will probably be it in the moment. And we might even be able to bounce and reverse the entire move tomorrow. Because the market might just be like, oh, knee jerk. We have a lot of stuff coming. So all that to say is, again, reiterating, the near-term price movement of this market is very much going to be noise until we have Thursday's numbers and Wednesday's output from NVIDIA. This week is nonsense. Yes. Yep. 100%. It is. So I just want to say, don't make any major decisions, and it might look freaky, but if you're worried about it, just don't be over invested either, and have cash at the ready to buy some dips, because you might get, and don't be in a rush to buy dips either, because you might get some really big dips. What I just laid out is a significant dip, but like I said, it might take a while for that to happen, if it happens. But what is also important is that I want you to understand, if we are trending over 685 on SPY, none of that is in the cards, and we are going to 700 plus hard stop. We are going to all-time highs, and that 700 level is absolutely in the cards. So those are your two hard lines in the sand. And until then, look, 685, call it 685, right? Isn't always has been. It's 684.58. This is it, right? So over this line, there are no bears left. No bears left. And we are just going higher. End of story. Is what it is. But we're kind of far away at this moment in time. And we're too deep for me to be like, I want to dip by this right now. Had we continued up and held over 7 here, we're just at that pivot point, right? Do I want to dip by right now? No, because again, you see how close that trend is to breaking. It's very steep and very uncorrected. So I would rather wait for higher prices and pay more to be more sure that this is actually happening. and safer. So we have to see. We will see. I would rather get better bargains on my Christmas presents later. So that's basically what I'm saying. I'm gonna have to buy presents anyways. It's TBD. And I want to wait till Wednesday, or not Wednesday, till next week. It's not even after Thursday. It's next week. I gotta see. Q's is even a little bit more different than the rest. So QQQ. So if you watch the other shows, QQQ has been struggling this entire time, and between the major indices, which are SPY, QQQ, DIA, which we call diamonds in the trading worlds, and IWM, which is the small medium caps. We also refer to this as the redheaded stepchild of the indices. In order to get a good solid trend across the board, we want to see all of these four, which are the top four charts on my screen, go generally in the same direction. Between these, we've just not, right? So it's 1, 2, 3, 4, 1, 2, 3, 4. And of all of these, 1, 2, 3, 4, Qs have actually more recently been the weaker of the four. And that quickly turned. We would see, and what near term, what that meant was rebalancing or broadening, if you will. And I think that is still the case. A lot of these things where I want to be is still the case. If I look at this, Qs is the one that was deepest below. Now I'm looking at the IWM, the small caps, and we think about how we started this video. It's about the rates, right? It's about that rate play. This is the tightest right now, actually closer to getting here towards that 200-day estimate. I think this will bottom out fastest. And inside of this, there's one very strong sector, which is IBB, and that is the biotech sector. This is the one sector that is strongest of all at the moment. This is the strongest sector in the market. Sector is like industry. So where is the money flowing? And this is where the majority of the money is rotating. So if your job is to more or less follow the money, currently the money is rotating into biotech and kind of healthcare. The second certain sectors of healthcare. The second strongest is diamonds, right? DIA, which is getting pulled down a bit, but still, is it on edge? Today is a little bit sketchier, right? But inside of here, it's still healthcare. What's XL? Geez. Oh my goodness. What is the healthcare? Cure is the. You guys, I'm brain farting on the healthcare ETF. I'm brain farting on the healthcare ETF. There is stocks, sectors, XLV. Thank you guys. XLV, healthcare, 0.5. So utilities, healthcare, this is just sectorspiders.com tracker. I'll just drop this. Huge brain fart. XLV. You can track this. This is just basic website, sectorspiders.com, sector tracker. And what's funny is that if you guys follow Chris Patel, you guys might or may not, but Chris, my buddy, who has been calling this for, I can't tell you how long, literally forever. If I pull this back to the last 3 months, this has been like a slow, quiet rotation. So over the last 3 months, well, let's go even further. So over the last 6 months, yes, tech has been doing good, 23%. Over the last 6 months, healthcare has been up 17%. And then you're like, why? Okay. Then the last 3 months, healthcare has actually outperformed 13%. Over tech, quiet rotation here, right? Over the last month, healthcare, 6%, right? Energy, we'll see. Over the last 5 days, healthcare. Even today, it's still healthcare. And you're like, okay, you don't really even notice this is happening, but it is happening. And so where that is, Cure is a 3x. So it's XLV. Thank you guys. Is the sector. It's certain parts of healthcare. So things like, this is the craziest thing to me. We talked about this on a Mitch channel, J&J, right? You don't want to be Brian Fave, because I don't not like UNH. I would like UNH a little bit lower, but there are certain things in healthcare, and healthcare is not all the same. Not all healthcare is created equal. If you're super tied to things like ACA subsidies is not going to be the same, right? And J&J is not exactly like healthcare, right? It's what would you consider this? It is in the healthcare ETF, but it's not healthcare like you would think of UNH as healthcare. Merck is catching a bid now, but this is a possible like massive rotation. Things like abbv. I would personally put these more into biotech. Is slow grind higher. But this is actually a bit of a safety rotation. So you do want to be somewhat cautious here that there is money going out there. Progeny. Okay, so that's a little different. That's insurance. Speaking of insurance, we could probably look at Buffett's Chubb Limited, probably doing okay. Markel doing fine. Abbott, that's a big bounce. AstraZeneca, these are more biotech. Life sciences, or Regeneron. Big reversal off the lows. So it's a bit of rotation. This is broadening. I mean, this is a massive reversal off the lows, which we had actually called out in our group, but giant reversal off the lows, by the way. I mean, that's a big one. This is life sciences. Pfizer. If Pfizer can get over, it's not over it. But if Pfizer can actually hold over 26, I mean, interesting. That could be, it's not yet. But if it does, it could be a massive reversal. Lilly, let's see. Big. Yeah. Lilly. Huge. And Novo Nordisk reminds me of Intel, which I am not a huge fan of Intel, but yeah, so Novo's probably got its own deals. So you have to research these companies. Not all healthcare is created equal. Let's look at MedTech, ISRG, not horrible. And I will preface this with one thing, and I did say this in my server, is that every year as a trader, every year this kind of happens where value, if you will, catches a bid, and I'm on a bit of a rant. Value catches a bid, and it looks really good. And I personally, every year, kind of want to root for value, and sometimes, yeah, every year this happens. Value catches a bid big around this time. Growth stocks pull back, and it looks really ugly for a little while. And every year. And I want to root for value, but over a significant period of time, what tends to happen in the long run is that people do eventually get really greedy. And when it's all over and the dust eventually settles, they will eventually sell their value because it's not as juicy as growth is, right? And sometimes in the near term, as traders, it is easier to short some of the high growth stocks for a trade for very short term trades, right? And timing is rough, right? Sometimes this can be a 30+ day chop fest. Things don't have to go down. I am long a lot of these value names at the moment, but sometimes those are hard trades too, I think is my point. And sometimes the easier trade is to be short some of the high flyers in the near term if you're going to go out and try to trade. But I still think that the market is going to be waiting very much for NVIDIA earnings and for growth to eventually come back. And when growth does come back, just know my gut is that they might end up still throwing away some of those growthy or the value names, because at the end of the day, people always want value or always want growth. And that's just kind of like human nature. But in the very short term, it can feel rough for some of these, for some of your growth portfolios, like Hood, like Palantir. But it doesn't usually last forever. But it can get ugly in the near term. Why don't I like Intel? I mean, it's just been struggling for like ever, and I'm not sure of the growth story there. Net. All right. So that's where we are. I'm going to do, you guys go and drop a couple tickers. I will pick a couple. And I'm going to start off with Hoodie because I am kind of interested in this. So personally, Hoodie, I would love to see 175 on my Hoodie. But let me see. I get a time check. I got about 30 minutes here. But for sure, I will just say we did lose the near-term uptrend, and that's not actually in question here. So from a TA perspective, what we have to know is that we do have a double top, we do have a lower high, and we have broken the near-term lows. We did get a massive bounce just recently up to 125, which, by the way, I bought, right? And I'm looking at this now and I'm like, that was probably not ideal. And I flipped on my shorts very quickly, and I'm just not sure that was like the best thing, but I don't want to make any rash decisions. So I have a decision to make right now on my near-term buys. And I have some ideas, which I'm still going to mull over for a bit. But again, this week, I don't want to make any major decisions. I just do not want to make any major decisions this week. So that said, I think hedges are in order. My $100 level, which I do not know if we get to see this week or not, came from right here. So what saved us from a technical perspective yesterday or Friday was this, what we call high volume node, if you will, the top of this prior level here. But the bottom of that general area, and where real support to me actually lies, is right in here. And this very specific spot isn't $100 to the penny, but it is in fact like 101. And so I might have an opportunity to tax loss harvest some near term or some more recent purchases, but they're not that big of a thing right now. So that's kind of what I'm mulling over in my head, just the near term stuff. But I would want to continue with some exposure, so I might flip that out for like some, I don't know, maybe Robin. But but if I do something like that, I have to see the trend turn, which I will not. I cannot see it yet. I have to, at this point, I have to see structure build, because this is very much like the IWM, where these two are very tight. This 20-day and 50-day SMA, we're going to get it, right? Like it's going to come down, and the 200-day is way down here. So I think this pullback is in order. And with crypto not acting right, I think this is just what's happening right now. There are probably a lot of people yelling at like 85. I don't know. My level is here. It's 101. So when we get there, if we get there, I don't know that we get there. We'll have to see how this acts. And I have some more confluence here. If I were just to throw this out there, what this is, if I go all the way top to bottom, that's like 90s at the very low end of this level. I would definitely have to buy more, but I would still have to see structure show up. So I can't mince this. We're like, this is probably like the greatest company ever, but this price is stretched, and now it looks like it's the day that they want to pull it back. But man, I'll just tell you what, I've not seen a stock get bought up like that so fast on Friday. If I'm too precise about this, it's just going to be gross. And I definitely don't want to sell anything, because when it bottoms, the way that this stupid stock acts, it's like so fast that they just buy it up so quickly. It's me crazy. But that's where I'm at. I don't see structure yet. My structure is in fact lower highs and now lower lows, and below the two major significant simple moving averages. 100 is possible still. Sub 100 is still possible. In fact, a lot of things are possible, but what's important to see is that buyers step in, and I absolutely saw buyers step in violently on Friday. So that was super constructive. Now I want to see that they still step in, and that step in on Friday was at 113. And so that level is still intact and still important. And if I pull that across, that's literally this. I have a lot of confluence, but I think that puts me still possibly lower. I like that 113, but yeah, I mean, what are you guys liking? I mean, I think everybody in their mind was like, oh, sub 120, I'll buy it. And myself included. I like it. I like it a lot. And I think if your time horizon's good, it's probably fine, but it could probably also go lower. So I don't mind buying little bits, but you have to have cash at the ready to continue to buy more. What's this? And that'd be nasty, but that would be, we'll see. You just got to see structure show up. That's what's important. And I don't have it just yet. So that's where I'm at on hoodie. If it holds over 120, I mean, shoot, we're good. But structure is, look, I need to see a lower high show up, and then I need to see something like this, and I need to see it start to hold over. It's this 123. So this is that, it's 123 right here. And I think that's going to be the more important level. Once it's over this 123, then I am in the clear. And that's what I know is true right here. And I can buy as much as I want over this level, as long as I'm trending over that level. So this is similar to the rest, but as long as I'm trending over that level, I can buy as much as I want. I know that I'm on the mend as a trader. Hood has up days without crypto, but if crypto is going to be weak for a bit, will the catalyst be? Oh, everything else. It would be banking. It would be event contracts, all of the above. So I think to your point, yeah, Hood is getting the crypto effect right now, and that's exactly what's pulling this down at the moment. Plus the capital market general uncertainty. So SPY is getting hit, generally speaking, plus crypto's getting hit excessively, specifically right now. So I think those two things combined is and also, by the way, fintech tends to bottom first. So if you remember Hood over here, so this is my nightmare moment with Robinhood, by the way, right? So I was super bulled up on hoodie, like over here. And this drawdown from 60 to this is a 56% drawdown on Robinhood. 65. I don't know if you guys realize this is $28. 65 to $28 within 53 days. That Robinhood did that. And then no less than 28 days later was it back to 65. So fintech as a whole actually tends to do this, and fintech as a whole tends to bottom first as well. And it could be this violent, but just remember this setup. This is the setup that I'm talking about. Typically below that 200-day simple moving average, where all of the books will tell you not to buy, it's usually the best buy, right? Not the store, but the best purchase below the 200-day simple moving average. We don't usually see it, but we're not close to that yet. That's 85. I don't know if we see that or not. And it's a rarity. And yeah, I would want to have cash of it. I would not want to blow my load up here if for whatever reason a stupid moment happens in the market and I actually get to have that opportunity. I would not want to be fully leveraged at the top. 62. I don't know. The market does unreasonable things. It does a lot of unreasonable things. A lot of things could happen. I mean, that's just saying. That's what happens. SoFi did the same thing. It always has done the same thing. Not calling anything. But SoFi is literally the same thing, right? So SoFi did a 53% nosedive, guys, in 75 days. And then 75 days later, it was back up. It went from $18 to $8. If you don't remember, this is not that long ago. This is 2025. It is 2025 this year. And then 75 days later, it was at $8 and it went to 18. So if you're not familiar with this rigmarole, like, you get familiar with it, because this is the market, right? And this is how things go. So I think that's all to say that shit happens. And sometimes, it sucks, but that's why you always, you never want to be fully invested and definitely not at the highs. But if you don't have cash to buy your Black Friday sales, and it's this weird thing, like every year I get to say, what's your shopping list? Do I have money to go Black Friday hunting? Like, what are my deals on? What deals do I have on deck? And yeah, I want to buy some Black Friday deals, man. Absolutely. But are you going to be able to afford them when they show up? This is important. Like, life lesson. I need to have that. All right. So SoFi, since we're on it, it's very similar. So we're at the lows. Tomorrow or Thursday, when we get this NFP data, guys, it could be like, boom, we're off to the races. We don't know, right? We don't know. But SoFi is actually in the exact same spot as Hoodie. It's in the exact same spot as Hoodie. Like, this is 21 right here at that next kind of level. And this area is the last time we were talking about this was the low 24s. So the big level I have is 2140 on SoFi, but we're not there yet. So these trends are not fully broken. SoFi, to SoFi's credit, I don't have a lower high. Well, I do, just below the 20-day. These are very tight SMAs over here, and we are just now losing today. But again, one day, honestly, doesn't make a trend. So today, this week's market is, like I was saying earlier, this 1 week, I don't want to take the snapshot. I don't want to make any rash decisions in this 1 week. It's next week. Can I be hedged? For sure. Today is a full day open and probably close below the 50-day simple moving average the first time. If SoFi doesn't close back over 28, this is the first technical day that it has actually opened and closed below the 50 simple moving average. Jiminy Crikey, since April 24th of this year. That's a significant thing. I think we're very much that's the same thing happened on Robinhood on Thursday the 13th. Thursday the 13th, that was the first day that Robinhood had an entire day trade below the 50-day simple moving average since April 22nd. Boom. Yeah, in its entirety. That's a rough one. All right, let me scroll up and then Tessie, before I go there. So a couple of things I put on. So Tesla did hit my level also, and a big bounce today. But I will say very quickly, I don't think that was, I think it was a great purchase for a trade. I don't know that it's an investment spot, because here's the thing. What happens on Tesla? And so my point is, I wouldn't be super fooled with the strength of today's early price action, because what just happened is that, yeah, Tesla bounced and it rallied right up into resistance, what was support. And now I would say that you need to assume that even though Tesla looked very strong today, that the assumption is that that prior support is going to act as resistance, which it did just a few minutes ago. And so from here, you need to see structure begin to show. So it's good that at least Tesla constructively today, higher high or high low. Today we do get a higher high. Now need to see another higher low, and then need to see another higher high, and then you can see another higher low over support, something like this, and then Tesla looks really good. But not. But until then, Tesla is still kind of at risk of this still. But that's what you need to see from a structural perspective. Expect a bit of a pullback, which you just got, and you need to see that trend continue. And it has to continue specifically with another higher high. So this next move on Tesla must break through here, and then it must hold higher and continue. If this 1, 2, 3 does not happen, that is off the table, just FYI. And what's on the table is that is on the table. So careful. This is why when I text him, sometimes he doesn't buy anything, because he's like, dude, you're just a trader. I'm like, yeah, fair enough. But anyways. All right, cool. Let's see. I see this, Corey, high beta. I'll just look at this and I'll just do it quick. So TE, this looks no good. So high beta, this to me looks like no appetite. This looks like a clear short. Bloom, I'm guessing, also looking short. I put a chart out there called sndk the other day. Went up, but I'm still going to say this is a short, right? This is a gap fill. Session gap. It's not a higher high. I would still be short this. TAC, never heard of this, but yeah, this is not high beta. So if high beta energy, what I would want to see is higher highs. So these look very flaggy in terms of a technical TA setup. This is your bear flag, right? So you're breaking down double tops, whatever, lower high. You're about to make your next lower low. That's your bear flag kind of setup. EOSE. Yeah, no fun. These do not look fun. Clover Health is, so again, we're not trying to, so this is now a penny stock. Those are all high quality, high cash flow. I think if you're looking at Clover, stuff like this, you're probably doing it wrong. So you want so things like J&J, right? High quality, high cash flow, highly profitable companies, abbv, right? High quality, high cash flow, not at risk, right? From from anything like that. Like these are not companies that are at risk of, these are companies that have been around for 100 years and will be around for 100 years. Tempus, TEM. At the 100, interesting spot. Not going down yet. So on watch, I would want to see these SMAs catch up. If they can catch up, cool. You might get a bit of a bounce, but you might get rejected too. This is watch. It's not a good trade setup. Well, it's not a good investment setup. It's possible trade setup. That's a possible trade setup, actually. bmnr, no, we're not looking. So bmnr is very clear on what we're looking for. We're looking for structure. On my post, and I said not at 33. I wanted 33, but did not see any buyers step in on Friday. And it's still continuing down. I actually am not liking this at all. This was my spot. And if you didn't see my post on Twitter, it was just like, no. And just for clarity's sake, sorry to all the Lindas. I have friends that name Linda. I have a couple Lindas actually, but you need to see buyers step in, and then you need to see structure form, right? This was my level, but that was not, it did hit my level, but what I was looking at on Friday was not good enough, right? So helping hand so that there is no confusion. And I've outlined it like 2 or 3 times so far today. So it could breach for sure, but I need to see higher highs form, and then I need to see higher lows form, and then I need to see more higher highs form, and then I need to see more higher lows form, and then and only then can I go long after 1, 2, 3, 4 of those things show up. And what happens if you just jump the gun? Well, this happens. Quite frankly, you can get a bounce. And you did get a bounce. You'll probably always get a bounce if you just like blindfold buy at a level that I think. But is it a sustainable bounce? That's the question, right? And in that instance, no, it's not a sustainable bounce. And so I guess where can this go? I'll quickly, with not really many levels, I'll just tell you, I put this chart out there too. I mean, right now, you're looking $30.50. You breach that, you're very likely looking at 27, possibly into this area. 23s over here. The purple line is a 200-week simple moving average. There's not chart anywhere here. This chart is nonsense, but with no sensible chart area. Oh, that's odd. Maybe it's not odd, but there's actually a wick down here. Not that matters. I don't think it actually matters here, but that happens to line up with an extension of this last consolidation, or not even bounce, if you would. What that is just literally doubling this. But that's where 27 comes from. Happens to line up with that little blip on the radar. I really don't think that blip is going to be relevant. But you'll probably get a little bounce there. Does that bounce actually sustain something? I don't know, right? Because it could just be to this and then back down to that and then to here and then to there and then who knows, right? But what's important to see is structure, right? I need to see multiple buyers stepping in multiple times over. Oh, we're just getting uglier here, aren't we? Good night. What the hell? What'd you guys do? VIX at 22? So VIX, when I see VIX over 25, that's usually better. It's getting uglier and uglier. Here, I'll give you guys one that I'm short because I don't know what this is going to look like here. I'm short datadog. This is my primary short right now. and then I'm going to call it, and I'll give you one more that I'm looking at. So power earnings gap. This is like a system. So usually you get a big earnings move here, bottom to kind of like here, and you get like one shot to go higher, which in fact this one actually did right there. It goes higher, but does not hold. And then this is a typical, I think, coming down breach. I think very likely coming into the 75 plus. Never really been the biggest fan of Datadog, but that said, this guy losing this kind of area right in here, if we make these lower lows, we have a lot of volume to fill in. The market does not have an appetite for high beta. In the near term, this is a high beta stock that is right in that kind of weak spot in the market at the moment. And this can get sucked in pretty hot, pretty heavy at the moment, like right now. And I could see this coming in hot to this area soon, like sooner than later. So I think this would be a quick and easy one. I mean, it's kind of spready, but that's my current thoughts. Next one to me, this is very typical CrowdStrike. CrowdStrike, this is an example of actually something I was short earlier. And it has a tendency to be a short on earnings and then post earnings be a buy. So to me, this is an example of like, okay, what does the other type of a short look like? This is called an up thrust, but this is your quintessential like blow off top, if you will. All-time high, immediate sell-off through, push down, and then today actually is probably like the perfect reload. And so this ends up looking like, if you're not familiar with the 100-year-old schematic of what supply and demand look like, go look that up. It's called Wyckoff. This is literally the blueprint of distribution right here. This is called up thrust through distribution. But yeah, if you could take a picture of that, that's what short looks like in the blueprint in the blueprints of technical analysis. Literally right there, just letting you know. And so that's likely coming down through the 50 and probably through the 20-day SMA, probably going to breach your all-time high, at least from a technical perspective. It's just a basic pullback. It's nothing crazy. It doesn't mean sell your shares if you're a long investment. Has nothing to do with that. We're not talking about investing. We're talking about trading. So can Google get higher highs? Probably not, right? 13F season is usually not a thing to really make this is funny to me. So if CrowdStrike was, I said the Crowd was the last one. If CrowdStrike was an example of up thrust through distribution, picture a blueprint of what a short looks like, and same with SanDisk, then Google, quite frankly, from a trade perspective, probably not that far behind. Not going to lie to you. It's just one I don't want to shorten now, or not one I want to. We'll see. I don't want to go long this now. This one's got a bit. This I don't think is going to be long. You got a lot of after hours move. That probably needs to be filled in. This might be an easy target too. Honestly, you don't have a new, you don't have it. So here's the earnings. Oh, this is actually going to be pretty simple. From the earnings low to the earnings high. You get one shot. Like I said, you get one shot to make a new high. No. And you didn't. So Google at minimum goes into a 45-day consolidation. So far these are just rule sets. You're halfway through that. That's just the rule. And if you lose that 28, which you haven't really, this is probably not good. That's probably, I don't really like this setup from a technical perspective. So I don't know that it's a short, but I definitely don't think it's a long. This just looks like sideways. I would probably, honestly, I think this looks good to harvest some premium if you can sell some upside calls. You guys, root gang. I'll just do a quick check on Palantir, then I got to call it. 173 was my level. Again, it was like, I don't like to see this getting tested so many times. This is not unlike hoodie. All right, so this is going to knee-jerk moment. I just don't know. 153 is next. 157, sorry. So this is 153.81. This is similar to my hoodie at 100 for Palantir. It's 153. This can happen fast. It can happen furious. Actually, if I want to be even more explicit or prescriptive here, it's below 153. These are levels. They're important. You probably get a bounce, but they're not necessarily investment spots, not in this setup. These are more like you'll get a trading bounce, but if you want them to be investable, you need to see buyers really step in. So there's actual session gap at 152. Guys, it's a little dangerous out there. I'm not gonna lie right now. So it can be, we can overshoot. I would not step in too early. Save some cash for some nice Black Friday sales and let the dust settle before going in with any like major size. I think is the moral of my story right now. Things will come around, but I don't need to be in a rush. Definitely not. There's no reason for this holiday season not to be one of the best holiday seasons for you and your family. Honestly, we've had an amazing year. Don't ruin it by chasing the highs. For real. Do not ruin it by chasing the high. Cash is nice, right? Cash is very nice. Black Friday sale on Black Friday. I mean, would that be awesome? That would be pretty nice. It would be pretty nice. But the market does irrational stuff sometimes. This is true. Patience is a virtue. Time also mends a lot of things. So if you did jump in super early already, you know, time will heal this, but you gotta be patient. No question. Just what I'm asking. Hey, you know, by next week, it could look completely different. We have a lot of data coming in, and that data is exactly what this market is on edge for. The market hates uncertainty, and all right, you got me with this, Corey. You got me with this death cross. Death cross. I can't believe I'm supposed to be gone here, guys. I got stuff to do. The death cross, what a death cross is when the 200-day and the 50-day simple moving average cross. But it's probably the worst indicator ever. Did you know, is the worst technical setup ever. Did you know that the death cross happens to mark the lows a lot of times? Did you guys know that? And this is what can somebody mark the last time that the death cross actually marked a low and not a high? I'll give you one. You're gonna like this one. Apple, death cross. Boom! Who knew this one? Apple, death cross, 2025. Absolute lows, baby. These are horrible signal. I mean, this is like, you can't get any worse, guys. Just saying, don't follow these guys. I saw this on the news hitting right now. Dude, should I make a post about this? Because this is probably like some serious, like, what's the word? Furu nonsense. Do you guys think this is useful for people? Because but the other truth is that Bitcoin does not look good right now. So I don't want people to go out and buy Biddy. Although Biddy is probably not that great. It's the 50-day. It's the 50-day and the 20-day that you really want to pay attention to. This may in fact actually, you know what? Let's make a test of this. My gut is that this is going to be closer to the lows than the highs. At the end of the day, this is probably going to be closer to the lows than the highs. We're at 92. I think you get to 85-ish. But Momo can accelerate. Yeah, but a death cross on a but the exit signal was 115. Or at least 110, something like that. How's ETH doing? Did we get our 28 yet? I mean, we're getting our 28, right? I mean, we're getting it. It's just it's possibly lower than 28. I mean, it could be friggin' 25. Who knows? but check this out. By the time you get a death cross on Ethereum, it'll probably also be the lows. So like here's your death cross on Ethereum. Here. Over here. It's very close to the lows, not quite the lows. Meta, by the time we get a death cross on Meta, it will very likely be the lows. All right. Look at this. Look. Death cross Meta 2025 was the buy. I'm just saying, it's not a great signal. That was a buy. But the headlines love it. Generally speaking, with use SMAs, we're looking for this kind of setup. When they're all really close and tight and expanding. The distance between those SMAs are expanding, and then they'll start to contract like that. And then eventually they'll start to expand again. This meta chart is kind of showing exactly that. But when they start to expand again, whatever direction they expand on, this is how you use SMAs. And when they contract is when they started contracting over here. In Hoodie and the S&P, they were expanding and now we're going to be contracting. It's just what's true. No, actually, Golden Cross, we can do it total opposite. Golden Cross, very, very much also inverse, dude. Also, I was just looking at charts. You're gonna love this. Golden Cross. You know what? All right, you'll love this. Golden Cross lows. First Golden Cross effectively calls the highs. Boom. There she is in all her glory. I don't know what to tell you. Like the worst, just like the absolute worst. I just saw this the other day because I was looking at this stuff. Like, what am I going to say? I mean, it's just what it is. Or like it's statistics, yeah, for sure. But are they, you don't want to use them like hard. Like they're not that great. Yeah. Anyways, that's my teachable moment. It's laughable. SoFi had one not that long ago, I remember. And sometimes they like flicker, right? So SoFi had in this moment here, SoFi was a death cross, since you guys are. SoFi actually was a death cross, and then instantly they're like in, out. SoFi had done both death cross and you guys might remember, death cross, and like 2 days later, golden cross. So it's like, oh, really? Really, guys? Really? Death cross here. Was that a buy or sell? I don't know. Golden cross here proceeds to go down to $4, cut in half. You know, you gotta look at a bunch of different things. It's not about cross. It's not. It's about the angle, the slope, the distance between them. That's what it's about. All right, guys. So enough learning for today. Lesson: patience is a virtue. I think this week is going to be a lot of chop, a lot of filled with a lot of fear and probably a lot of happy moments also, but neither I think are going to be, really real until we see how the dust settles out. I think that's what's going to be important. Whatever happens this week is probably going to end up being noise. At the end of the day, it is true that we do look extended. I think you guys can see that now. And personally, a little bit more caution than optimistic at the moment. But hey, if we get some really nice Black Friday sales, I know my shopping list. I hope you guys do too. But all right, until next time, I'll see y'all then. And tomorrow, I believe I'll be checking in with Amit. So adios until then. See ya. Bye.